Opendoor stock continues to be one of the most compelling stories in the market right now. Tuesday's session added another chapter to the narrative, with the stock seeing a mix of volatility, speculation, and early positioning as the market digested the company's latest earnings results. After closing Monday at $2.46 following a 17% gain and an additional 3% after-hours bump, all eyes were on Tuesday's action to see whether momentum would hold and what the broader market would make of Opendoor's Q2 earnings release. The earnings themselves were solid. Opendoor reported that it sold 4,299 homes in the quarter, generating $1.6 billion in revenue, a 5% increase from Q1. Gross profit came in at $128 million, representing an 8.2% gross margin. Contribution profit was $69 million, slightly down from $95 million in the previous quarter, translating to a 4.4% contribution margin. While some numbers showed a dip, the headline news was that Opendoor posted its first quarter of adjusted EBITDA profitability in 3 years, clocking in at $23 million. That's not just a milestone. It's a signal that the business is stabilizing and that Opendoor has the ability to operate profitably in challenging macro conditions. Net loss narrowed to $29 million, while adjusted net loss shrank to just $9 million. This kind of performance reflects a company in transition, moving away from survival mode and starting to execute a more focused, sustainable strategy. But let's talk about the market's reaction. After the report dropped, shares initially fell in the aftermarket. And while that's always something to note, in this case, the dip looked more like a knee-jerk reaction than a thoughtful reassessment of the business. We've seen this before: expectations get hyped up, earnings come out, and even a solid report gets punished simply because it didn't exceed some unspoken bar. By Tuesday's close, however, the stock remained relatively stable. While it didn't replicate Monday's explosive gains, the fact that it held ground, especially after a brief dip, speaks volumes. Traders are reassessing. Long-term investors are sharpening their pencils. And retail interest? It's still alive and well. So where do we go from here? There's still a powerful bull case to be made, both for continued short squeeze and for Opendoor's long-term future. Let's start with the short squeeze. Short interest remains high, over 20% of the float by some estimates. Many of these positions were taken before the stock's recent surge, meaning they are likely underwater. If the stock starts trending up again, we could see another round of short covering, adding fuel to any rally. The cancelled reverse stock split only strengthens this setup. It shows that the board has confidence in the company's fundamentals and that they're not looking to artificially prop up the share price. That alone helps attract more natural buying. The retail crowd is also back. We're seeing increasing mentions of Opendoor on Reddit, StockTwits, and across YouTube. This time, however, it's not purely speculative. The conversation has shifted toward fundamentals, toward cash flow, profitability, and market recovery. And that's a good thing. It creates a more stable base of interest and helps reduce the volatility associated with hype-driven trades. On the fundamental side, Opendoor is making the right moves. Yes, management tempered expectations for the back half of the year. They acknowledged that acquisition volumes will decline and that inventory levels will be lower. But that's part of a strategic shift. The company is moving toward operational efficiency. They're not chasing volume. They're focused on doing more with less. That kind of discipline matters, especially in a market that remains uncertain. Housing data continues to be mixed. Mortgage rates are still high, but supply remains tight, and home buyers are adjusting. Opendoor's model, using technology and data to streamline buying and selling, is well positioned for a normalized market. And if the Fed does begin to cut rates later this year or early next, Opendoor could be one of the earliest beneficiaries. Also, let's not forget, the company achieved adjusted EBITDA profitability with lower volume. That's a sign of scalability. If the market improves and volumes return, margins have the potential to expand. The underlying economics are heading in the right direction. This isn't just a short-term trade. For long-term investors, the pieces are finally coming together. Opendoor has weathered the worst of the housing downturn. It's cut costs, streamlined operations, and proved it can generate positive EBITDA. The leadership team seems focused and aligned. And with Nasdaq compliance regained, the stock avoids the overhang of delisting risk. In the coming sessions, price action will be key. If Opendoor can reclaim $2.50 and break higher, we may see the next leg of the rally unfold. Watch for increasing volume, especially if options activity picks up or if we see bullish analyst commentary. We're still early in the week, plenty of time for sentiment to shift again. So where do we stand as of Tuesday night? We've got a company that beat expectations on several metrics, regained compliance with the Nasdaq, and posted its first profitable EBITDA quarter in years. We've got a stock with elevated short interest, growing retail engagement, and improving fundamentals. And we've got a market that hasn't fully priced in what a turnaround might look like. Yes, there are risks. The macro environment remains challenging. The company is still not net profitable. And any missteps in execution could derail momentum. But that's true of every growth story in transition. What matters is the direction of travel, and right now, that direction looks increasingly bullish. For traders, this could be a short squeeze setup still in its early stages. For investors, it could be a chance to accumulate shares in a company that is just starting to emerge from the fog of 2022 to 2023. Thanks for watching. If you're following Opendoor, let me know what you thought of the earnings report. Are you buying the dip, holding strong, or waiting for confirmation? Drop your thoughts in the comments. Don't forget to like and subscribe for more updates. We'll see you in the next one, possibly located on the moon.